Thank you for joining us here at Showcase Broadcast Studios, where we bring in specialists and experts in their fields to help give additional insight and guidance and advice and ideas for professionals around the world now. So thank you for watching and listening. My name is Michael Wardy, Regional Director and Certified Financial Planner at Source Advisors, where we've been working with our clients for over 38 years and identifying and maximizing tax incentives through the various programs that are available. I would like to introduce my co-host today, Al Schmidt, who is also my colleague here at Source Advisors. Welcome, Al.
Thank you, Michael. Happy to be here.
Absolutely. And Al, I am going to have you take the reins in today's workshop or presentation and introduce Frank and talk about a very timely topic in today's presentation, specifically on how to help CPA firms grow their advisory practice. So with that, Al, I'm going to have you jump in.
Thank you, Michael. Yeah, I was talking to Frank about this particular topic, and I found a number of things pretty interesting. So how to build and grow an advisory practice, which actually can be broken down into a couple of subtopics or components, if you will, which is finding talent and then developing or diversifying revenue streams. So, Frank, with that, can you maybe tell us a little bit about yourself and your background, and then we can get into some of the other topics there?
Sure. Thanks for having me, guys. I appreciate the opportunity to talk about these fun things. So my background is rather different for accounting firms. I was a humanities, specifically an English major in college. I started as an economics major, but realized that really wasn't that interesting to me. I liked business, not theory. And then I thought, wow, I really like to read books, and I'm going to get a degree from a really good school to read books and write papers. And that suited me really well, but not for getting into the job market. It was a little disconcerting when all of my friends who were also humanities majors, they were government majors and history majors, and those folks are going out, and the investment banks and Wall Street firms or consulting firms are hiring those guys. And I followed along in the path, and I ended up at a smaller litigation support advisory firm. And for that firm, it was a real gamble for them to hire someone who wasn't from an accounting background. It was a different sort of hire because they were used to getting CPAs from accounting CPA candidates, I guess, from their typical schools. I was in the New York office, and they were hiring kids from Villanova and some of the other schools that were in sort of that Northeast area, paying them market rate. And as an English major, I was paid under market rate because I had to prove myself as I went along. So it was an experiment that was supported by a couple of the partners, but they actually had to fight some battles behind the scenes to get approval to hire somebody from such an atypical background. And that was 27 years ago now. Al, you talk to a lot of different firms. Has that attitude around hiring really doesn't change? Accounting firms, CPA firms are hiring, looking mostly for that accounting background person, correct?
Yeah.
Oh, yeah.
Yeah. And it's nuts because that pool of people is shrinking dramatically, right? We saw that in the last couple of weeks with publications or articles from the AICPA. I know Deloitte has just put out that they're increasingly hiring and saying that this pool of candidates is tiny. My oldest son graduated from LSU a couple of weeks ago with an undergraduate degree in accounting, and is going back for his master's to fulfill the 150-hour requirement, which is another complete set of issues around how that 150-hour requirement creates such an artificial barrier to so many different people from getting into the business. But It doesn't really, that 150 hours doesn't really create an accountant that's going to be any better than a humanities major who has to take some very specific steps in the onboarding process. So to me, that it's easy to hire someone who's a humanities major, who's an intelligent, intellectually curious, knowledgeable, wanting to study and learn person, right? Because you look at writing a paper in history. Harvard, for example, more than half of their undergraduates are majors in computer science, right? Now, we know there's a lot of jobs at Google and Amazon and other places, but there's no way on earth that 800 kids a year from Harvard are going out, their graduating class is about 1,600. There's no way 800 of those kids are going out and working at Google every year in computer science. I'm pretty sure that Wall Street is going to hire a great number of those kids because they've been taught how to think, not what to think about, right? Computer science is just a different way of looking at a problem, analyzing a problem, arriving at a solution, and then delivering that solution. So why not hire a smart history major from a good school? They're probably, if you're a $20 million firm, if you're a $5 million firm, that student is probably going to be better than the remaining accounting students who are left over after the Big Four, the next group, even the top 100 firms pick over that whole list of candidates. So when you hire that person, the very specific exercise you go through in onboarding is kind of what I did 27 years ago. I took accounting 101 and 102 at a community college the summer before I started. The firm paid for it, and it was my passing with a certain grade was a prerequisite to taking the job. So they essentially got to screen me first, make sure I understood the language of accounting and the very basic concepts of accounting, because that's really all you want out of that new hire, because every firm's going to teach you how to do something differently once you're there. A CPA in training is essentially an apprentice program, right? If you're earning time towards being and passing your 4 parts of the exam towards becoming your own CPA. So there's still a great deal of teaching on the job. So you could take somebody like me with an English degree, go work for one of these litigation support firms, and then on to KPMG. I mean, it's one of the Big Four firms, right? You don't get any more screening than that to go into a firm of CPAs. And it really was just the beginning of learning that in accounting 101 and 102, so I could speak the language and understand the concepts, and everything else was on the job training. Now, interesting with that whole idea, there was another person that I worked with who was a history major, government major from Dartmouth. Great guy, and turned out to be a partner in a consulting firm now. Myself, I was successful at KPMG, where on the audit and assurance side, I never ran into another Ivy League graduate. They were all hidden on the KPMG consulting side. I always ran into accountants. I was in Houston at the time, and then in Montvale, New Jersey. I ran into all the people from UT, A&M, LSU, but I never ran into anybody from Harvard, Yale, or Princeton when I was there. So it kind of makes you wonder that I know those are smart, intellectually curious people that get all kind of jobs in banking and technology. Why not in accounting? Why not in the advisory side of accounting?
Mm-hmm. That's actually a good point. And you're right, because the pool is fairly small and continues to shrink.
Correct.
Where else can they look? You have to go outside of the tradition, which historically CPAs don't go outside of what they're comfortable with, what the tradition is. They have the mindset of, here's what we do, go in the office, do your work, your deadlines are this, keep on moving along, plugging along. They have to be more creative, and the whole adding in the advisory is one part of the creativity, but then also going outside of the traditional, we hire people with an accounting degree. I think that's probably a lot of firms just don't think about that.
I think you're absolutely right, Michael. And I think that the solution of moving towards advisory actually goes hand in glove with hiring outside of your traditional pathways.
Yeah.
And it also has a third element to it. And this is kind of where my partner and I came into this with Growth CPR, which is this idea that we wanted to move away from advisory being foreign. We wanted it to be familiar. And as you alluded to, accountants are very comfortable with checklists and compliance-oriented thinking, right? They're great people at what they're trained to do. They're not necessarily creative thinkers. And a lot of times the creative accountants, not creative like we don't look good in orange creative, creative within the boundaries of business and moral and ethics, right? The really creative folks are getting snapped up at those larger firms, right? They're being positioned right away to move off into that advisory area. They're not trickling down to the $20 million and smaller firms. They're the folks who are watching you and I and now having this conversation, right? So I think when you start to move away, as we did at Growth CPR, from that nebulous idea of build a bigger advisory practice or go sell more, there's no what to sell. So we created a couple of approaches to advisory that were very checklist oriented. And why it goes hand in glove with hiring non-accounting background folks is that we designed them to be learned, delivered, and supported by non-CPAs. So starting at very fundamental building blocks. And we did that because, like you said, accounting firms and CPAs and partners in those firms, they're not going to be very dynamic in their thinking about diversifying their revenue streams, right? They're happy right now. There was a lot of PPP money floating around. It's always more important to go and get the audit and tax work for a company because that work is an annuity. It happens all the time. Advisory is scary because advisory has always been thought of as this eat what you kill environment. And it really isn't. One of the things that we teach is that we look at the old management letter approach. Right. So every time you do an assurance engagement, you're writing a management letter. And that management letter is going to lay out very specific things. My partner tells a great story about one of the first firms that he worked at. One of the first companies that he worked at after he did his time at an accounting firm. He went in and the auditors were from one of the big four, and they came in and they were worried about depreciation schedules and fixed asset inventory in their management letter. The problem with that was, as they were going through that process, Peter identified about 6 areas of fraud. And the fraud issues were completely missed by the auditors because they were more concerned about their checklists and looking at technical aspects of the audit. They didn't know and understand the business itself. And that story has been, even though it's 30 years old, has been influential in how we look at advisory from a CPA firm. So we think in terms of a management letter. We look very closely at areas around cash management, creating more profitable, increasing the profitability of a firm, and reduction of expenses. In none of those 3 elements do you need to be an accountant or a CPA to understand and deliver those. Accounting 101, Accounting 102 is going to give you the vocabulary and the concepts to understand cash management, to understand profitability, to understand, expenses and potentially how to reduce them. Being a smart person will help you learn how to learn about the business, to learn about their channels, learn about their customer segments, learn about their value proposition, understand all those elements of the business that will help you identify profit opportunities and then deliver consulting services around those profit opportunities. So what the management letter approach does is it makes it very simple for firms to execute advisory. They say, look, we reviewed your records, and in your cash management area, your receivables are this many days outstanding. Here's a process improvement you can do. You're not billing at the time that you sell your product or deliver your service. You're waiting 30 days. Then you have very gentle collections that start at 30 days after. So the next thing you know, you're collecting money and it's 120 days later. It just doesn't work. Most businesses that fail have a very successful product. They don't collect money. It's money that fails before the product fails. And companies who are successful also have founders or leaders who are really good at what they do. They're great marketers. They're great engineers or developers. They have a product that they can sell. They're just phenomenal, sell ice to an Eskimo type of salespeople. Very rarely are they also just as good at running their business. And that's where their CPA is the one who touches that business all the time. And if they can help them with fundamental building blocks like cash management and expense reduction and being more profitable, you suddenly have a great advisory practice that goes hand in glove with everyone that you do taxes for. Everyone that you don't have to be independent of, you can do that advisory work. And if it's simple enough, you satisfy your people issue because you don't have to worry about hiring all accountants anymore. You obviously have to hire accountants because they know how to do audits. What's the word? It's not you're learning how to do it, right? Becoming a CPA requires an apprenticeship. So we always have to meet new CPAs by that apprenticeship program at the big firms all the way down to the small firms. But you can have a whole set of people who can do advisory work that aren't in that apprentice program, that are smoothed across the entire year at a higher profit rate. And then more importantly, for both that group of people and your accountants, it's different work. It's intellectually challenging. It's stimulating. It may prepare them even better for when they leave. But in an ideal solution, they don't leave after 2 years. But every staff accountant, whether they're at Ernst & Young or Tom Smith CPA firm in Allentown, Pennsylvania, they hate their job during busy season. And a lot of them are going to hate their job enough that they're going to leave. They may think the grass is greener at another firm, so they jump ship. It's not. It's a terrible process. They end up going to industry, or they end up becoming miserable managers, right? Wouldn't you rather have people who are sticky with your firm because they get to do advisory work, because they get to learn about businesses, because they get to do it still in a framework that's comfortable to them with checklists and feels more like the familiar, the compliance, but it's actually thinking about a business? And then every firm could improve every year. So you write a management letter with every audit that you do. You should be writing a management letter every quarter, every year, every 6 months to your clients. And then suddenly advisory isn't eat what you kill. It's a recurring framework that you can go back to each client and do small $5,000 and $10,000 engagements or projects that build up to $100,000 advisory practice, maybe a $200,000 or $300,000 advisory practice for a bigger firm. And then you get to explore the really interesting things. Then you get to move into that area where you're hunting and finding the $20,000 and $30,000 and $40,000 advisory products, because now you know how to run. So it's really a crawl, walk, run type of scenario of building your advisory practice. And to me, what we do at Growth CPR sounds fundamentally different than almost everything else I see on LinkedIn. We'll get you more leads, build qualified leads, learn how to market better. We'll help you sell more. Never do they say, your leads need this. What are you going to sell? Right? No one answers that question. I could tell anybody, I coached track and field for many years. I could say, go run faster. But if I'm not telling you how to run faster or how to jump higher, how to throw farther, you look at me like I'm crazy, right? So all these people are saying, get more leads, we'll sell more, go do this, go do that. But there's no actions that they're teaching them. There's no product to take to market. We cracked the code on that, as my partner says. We have the product that comes to market that helps you deliver those things, and you don't need a CPA. It's at a higher margin. It's a better deliverable to keep your people sticky with your firm. It's really, to me, it's a holistic solution that's fundamentally different than everything accounting firms are doing, and it ensures that they exist and are profitable in the future, more than automation or all the other scary things on the horizon. This is something, hire Growth CPR, and in 5 weeks, you'll be selling advisory products. It's not rocket science.
So you've talked about it as kind of an add-on or diversifying your revenue. Could you also view it as a way to get your foot in the door?
Absolutely.
Because all CPAs always say, I want more clients, but it could be a way to get your foot in the door that could also lead to the other recurring tax and advisory work that you talked about too.
Yeah, and that's a great observation, Al, because as we go back to reality, and accountants are out there at their Rotary meetings and their other business group meetings. I mean, personally, if I never had to leave my office again, I'd be ecstatic. I feel like a recluse. I love Zoom for that very reason, right? But accountants can't do that, right? They have to go out. Partners are active. Wouldn't it be great to walk in and say, hey, for my client, I actually improved their profitability, their net margin by 150 basis points in the last 12 months. And here's what we did, as opposed to saying, oh, I'll undercut your current accountant. I can do your taxes for a lot less and throw in your family 1040s as well, because that's a commodity, right? You're not going to make any money on that. But if you can really talk about how you improved a business, it gives the sense that, or the knowledge that you understand their business and you have real products. You go from being an expense to an investment. I can't talk about a return on investment for doing your taxes. I can't talk about a return on investment for doing the compilation that the bank requires to make sure you're in compliance with loan covenants. But I can sure talk about a return on investment if I improved your profitability. I can talk about a return on investment in terms of meaningful metrics and measurements around cash management. I can talk about a return on investment in expense reduction, and those are the three building blocks that we teach.
Yeah.
In an ideal world, you actually could transition almost completely to being an advisory firm with a little bit of assurance and tax work, and then there's no busy season, and your workload and your cash flow is actually flat and comfortable during the year. It's a lot less guesswork, where if you don't have 60% of your time billed by the end of the first quarter, you're in trouble.
Right.
So, Frank, I know that most of the, if not all of the top probably 200, 150, 200 firms have maybe more than likely figured this out. The majority of CPA firms are not in that mixture of figuring this out. What do you do to help them out? At least if you're meeting them for the first time, they say, we have our tax practice, we have the audit practice, and we just need to figure out how to blend and expand our practice. We're not sure how to do that. What would you tell somebody just off of the street? Give them like one piece of advice to say, here's what you need to do just to start out.
Well, I would say that you have a tremendous amount of information from your tax clients, your businesses that are tax clients. You know what their revenue is, you know what their expenses are, you know what their margin is, their profit margin is. If you can compare that to any resource, if you do business valuations, you already have RMA or other online sources that are out there that give you industry metrics. If you look at your clients, math says that a great number of them are going to be below average. So very simple exercise would be to compare them to the industry average. If they're in the 30th percentile, what are things that you can do to propose to do for them that will help them improve? It could be reducing their expenses, because you do see some of their expenses on the tax return. It could be talking to them about their different product lines and what product lines have a gross margin that's below the industry average. Again, you have that in that RMA or similar data. That's a great entry talking point, because that means you understand their business, not just the technical part of doing their tax return. So it's about client identification. And the best thing, you said earlier, a lot of CPA firms want to earn more clients, new clients. The healthiest place to begin shopping for clients is the people that trust you already. They trust you to do their taxes. Now start to leverage the information that you have from those tax returns and knowledge of the business. Use some meaningful statistics like industry averages and say, I can help you get better this way. So now it's a little tough because you have to understand a little bit of what our products are, but we start our teaching at a very custom level for firms and a very affordable level for firms. And we'll teach you how to do that. And it starts with client identification and then understanding the deliverables and being able to explain those to your clients.
Well, good. Well, if anybody did want to reach out to you and get in touch with you, how would they do so?
I am always at Frank R, first name, last initial, at Growth CPR. You can find us at www.growthcpr.com. Connect with me on LinkedIn. I have taken to writing my Dear CPA column once a week. I think, Al, you've seen those. And I think last week's was great. It started with, Dear CPA firms, your staff accountants hate their job. It's one assessment, but they do, and find a way to make them like their job. It'll be easy to hire. It'll be easier to retain those folks. And ultimately, we want to be profitable and happy in business. So like I said, find me through LinkedIn. Always email me. Find us on our website. It's great to talk about these things, and I'm happy to talk to any firms. And our solutions will be custom to your firm. A lot of firms do have a bit of an advisory practice, and we can leverage off of that. We're not the smartest, most brilliant people about this in the world, but we are the most realistic and real world approach to it. And I think that's more important than being the smartest guy in the room.
Absolutely. Well, Frank, thank you.
Thanks for having me, guys.
A lot of great information. Absolutely. And maybe in a couple months, we'll bring you back in and re-record another one just as a follow-up, even say what's going on, what's changed. Al, thanks for being a co-host. I always appreciate that.
Appreciate it. Appreciate the time. Appreciate Frank joining us as well.
Yeah, thanks, guys.
Yeah, absolutely. Everyone, enjoy the rest of your day. Thank you.
Take care.